All right, welcome to another episode of Breakaway from the Rat Race. And today I have the pleasure of speaking with Jason Brown. Jason is the founder of Power Trades University and 5-year millionaire. He has over a decade of stock and options trading experience. He has a podcast that we're going to talk about, and he's an avid YouTuber. Jason believes anyone can profit from the stock market. Even if they've lost money before. You just need to know how to identify the best time to buy and sell, and then the correct option strategies that can supercharge returns and minimize risk. Jason helps people go from nervous beginners to confident stock and option traders and professional. Jason, welcome to the show.
Eric, thanks for having me, man.
So as we were talking about earlier, a lot of the people that I have on my show, they are kind of real estate investor. I like stock market as well. I don't want to be like just focused on one thing. So I like to diversify. I like to have some things in the stock market. There's some things in real estate. So you have a lot of experience in finance, and what I like is that you basically take people that don't know anything, or people that I would
Think they know.
call the lucky people. They think they know because they made some money, but they really don't know. And then kind of like take them into like professional stock and options trader. So tell us a little bit about the difference between the two and how you go from one to the other.
Yeah. So, a lot of people, when they think about the stock market, we all know that it's a powerful machine and a way to make money. And, that was my first introduction to the stock market. We grew up poor. And when I say grew up poor, like we grew up sleeping in sleeping bags. I remember going to my best friend's house and I was like, wow, you have a bed. And he was looking at me like, of course I have a bed. And I'm like, well, me and my brother sleep in sleeping bags. And so when I looked at, you know, our lifestyle, it's like, okay, why are we poor? I thought it was because he had two parents and my mom was a single parent, but I watched her work two jobs. And so that wasn't the answer. So from an early age, I was interested in how people accumulated wealth. And a lot of the wealth was in the two biggest industries that we're here to talk about. One was real estate, but the other one that really was always at the top of my mind was the stock market. You hear about all these people who made money in the stock market. And so I wanted to get involved in the market. But to answer your question about what's the difference between people who, when people look at the market, they think it's gambling, they think it's luck, they think, it's like going to a Las Vegas casino table. And then there's other people who understand, like the Warren Buffetts of the world, the Peter Lynch's of the world, the iconic investors that understand it's a game of fundamental research, a game of technical analysis, but more importantly, it's a game of managing risk and reward. And once you look at it from that strategic standpoint, you can go from a hobbyist, a gambler, somebody that thinks it's just fun or luck if you make money, to someone that strategically and consistently makes money and minimizes their losses. And that's the difference between going from an amateur to a professional. It doesn't mean going to get a license or technically going back to school, but it just means a switch in your mindset and how you actually play the game and what strategies and tools you play it with.
Yeah. And to me, it's about having a system, right? So a lot of the time people I'm going to buy some Apple stocks, or I'm going to buy some Facebook Meta stock and stuff like that. And it's a good time to buy. Why is it a good time to buy? All that kind of stuff. Never mind that. But it's kind of like real estate. When I buy a distressed property, I know that it's a distressed property. I know kind of what price if I'm going to buy it at this price, I'm going to have to put this much renovations. I'm going to have these holding costs, and then I'll be able to sell it at this price. I have an exit strategy. I know how long I'm going to keep that property and stuff like that. And I want to make sure that I buy at the right price in order to get the profit and the returns that I'm looking for. And this is what you need in terms of and you can help us with that. It's kind of like having a strategy that's going to say, well, this is when I get in, this is my entry point, this is my exit point, and then how do I determine that? How much do I put in that? And so what is the system that's going to make it like I'm not just buying Facebook because something happened or whatever. I have a reason for buying Facebook today, not tomorrow. And what am I gonna do with it?
Yeah, so a couple things that we want to think about when it comes to the stock market, and some of the things that we teach at Power Trades University is number one, you need to know how to use call and put options. And the reason that's so important, because unlike real estate, you're saying like, hey, I can buy this distressed property. If I fix it up, I know that it's going to go up. Well, with the stock market, you personally don't have the power to impact the company. You're investing in the founder, the leadership, the management, the technology, whatever they were able to build. So you can't impact it in that way. So what's nice is, similar to the real estate market, you can research who's a good company, who's a good leadership. Is the whole world going through the bad time right now, or is just this company going through a bad time? Will they eventually get over this when interest rates come back down, when the world opens back up, et cetera? So you can do that same fundamental research, same way you say, hey, is this an area that people are moving into? Is this a place that's going to come back? Are supermarkets, schools being built in this area? Eventually the prices are going to rise. This property, if I could fix it up, you doing that same research of area, location, and why you believe it's going to turn around. Except you can't physically add an addition or redo the bathroom on a company. So I like that you have to do the same fundamental research. But what I like about the stock market is you don't necessarily need the stocks to go up, but you can make money from stocks falling. And that's where calls and put options come into play. So when you to be more specific, when you say what's the system, number one, you want to be able to research and look at charts, right? And do technical analysis. Is the stock at support where people like to come in and buy it and feel like it's undervalued? Or is it at resistance where people feel like, you know what, that's too much to pay to live in this neighborhood? Same way with the stock. There's too much to pay to play in this sector or this industry. And if you can look at stock charts, the patterns will tell you when to buy and when to sell, or at least give you an idea if you're overpaying and underpaying. Second, you want to do fundamental research. Example I like to give with that is, if you look at what's going on right now, you look at what's happening with AI. So that's in the tech space. So what do we need for artificial intelligence to work? We need computing power. We need cloud space. When you send a query to Chat GPT, it goes up and has to get processed in the cloud on some computer somewhere. You need people like Amazon Web Server, Microsoft Azure that's hosting the answers, the responses when people send a query up. And then you need computing power. Companies like NVIDIA, AMD that makes the chips for the computers that people need to process this power and give you an accurate response. So that's like real estate. It's like, what neighborhood, or it's like, what state and city do I want to live in, right? And it's like, I want to live in the tech space, and then I want to live in AI. And then you drill down to the neighborhood. What are the specific stocks, the AMD, the Amazon, the Microsoft that you want to invest in so that you can get a piece of it? So that's like how I kind of equate the fundamental analysis. So when you mix the technical, reading the charts, with the fundamentals, like, why is this a good area? Why is this a good company? Why is this a good sector? You get a broader picture of how you can make money. And then when you bring in options, you say, do I actually want to own the stock, or do I just want to control it? Which is kind of like wholesaling in real estate, which is something you can do with call options. Or you say, this is a horrible company, horrible industry, things are going bad. And this is what I love about the stock market. You can buy put options. You can actually make money from the stock falling. You hope it doesn't get better. You hope people don't move into this neighborhood. You hope this company, well, I mean, you always hope a company survives, but if it doesn't, you actually can make money off of it. So you don't have to be just hoping things go up. And that's where the market offers a more wide variety of ways to make money, because it's not just based on buy low and sell high.
Yeah. So what kind of industry would you recommend in this? I don't know if we want to talk about recessions and inflation now, but or the current economic condition, what you see happening in the next 6 months, and then maybe we can talk about which industry do you think people should focus on?
So industries change that you could focus on. If you look at before the pandemic, if you look at when the pandemic happened, the world kind of shut down. And so during that time, what industry should you focus on? You should focus on anybody that sold anything technology, even Best Buy, because everybody needed cameras, they needed computers, they needed to work from home, which means they also needed Zoom, they needed DocuSign because people weren't going face to face and signing papers and documents anymore. So you have to look at what's going on in the current economic environment and say, okay, the world shut down, they need all these things. Those are the stocks that boomed. Now, as we're kind of going into post pandemic, those stocks aren't the stocks that work anymore. Everybody's canceling their Zoom account. People are tired of Zoom and people want to meet face to face. People are back in person signing real estate documents, so they don't need DocuSign as much. And so now those companies are losing customers. People are canceling because they pulled forward so much demand, and there's nobody left to sign up as a customer. There's only people left to leave. And so you have to look at how the decisions of what's going on in the micro and macro environment are influencing what's happening with stocks. So if you look at the current condition, it's like a high inflationary market. Well, you add high inflation with high interest rates, and people who've already bought homes staying put, that doesn't really bode well for probably real estate stocks, doesn't really bode well for automotive stocks, right? Because who wants to pay a high interest rate for a car right now? So different things like that, you have to just look around and say, is this the right time to buy that, or is this the right time to sell that? And then if you look at AI, are we at the peak of AI, or is AI just getting started? I believe AI is just getting started, which means everything's going to have AI. If you look at Zoom that we're using, they have an AI that summarizes the meeting that we're on now. So now you almost don't even need a secretary. Zoom's going to summarize the meeting and send you an email afterwards. I think that's just the beginning of every software, whether it's customer service, whether it's Siri from your iPhone, is going to be equivalent to ChatGPT. You can ask Siri something and it can give you back an answer. And so that's all going to need more computing power. So what industry should we be taking a look at now? Definitely technology, definitely any company that hosts other companies' servers in the cloud, companies that make computer chips, different things like that.
Yeah. So okay. And then so all the technology and stuff like that. So AI stock obviously is something that, is just getting started. And it's really everything that we're touching right now is being impacted by AI. Everybody's jumping
Mm-hmm.
on this bandwagon. So even the things that we didn't think about uh, are kind of there. But so you look at the industry, and then but you're not the only one looking at that industry. So how do you pick kind of like so I guess you look at the fundamentals, you look at but how do you pick a particular stock or a particular stock or a particular strategy for in an industry that is, you think is going up? Let's say it's an AI stock that you choose. How would you, because everybody is knows about this, sometimes the traders are a little bit ahead of the curve. Is it overbought? Is it underbought? There's still some room to grow, and kind of like what's the time frame that you hold that particular stock? So what are some of the strategies that you would use to kind of maximize your return? And if you decide to invest in a strategy in an industry that is already well known to prosper and grow, and is it better to do that, or is it better to go in something a little bit more obscure?
Yeah. So in the stock market, everything depends. I know sometimes people don't like that, but people say, like, is this the best time to buy? It depends. Is this a good strategy? It depends. If everybody knows about AI, should I still buy it? It depends. And I want to explain why it depends, because each person has their own unique risk tolerance and what they're willing to take on as risk. And so some people find comfort in buying a Microsoft. Everybody knows about them. It's not a hidden stock underneath a rock or anything like that. So there's actually comfort in going with a big company that invested in Chat GPT, for an example, a big company that has Microsoft Azure. If most people don't know what that is, that's their servers that companies can rent to store information in the cloud. So there's also comfort in going with a big company like that. And just because it's a big company doesn't mean, well, everybody knows about it, so no one's buying it. Actually, the opposite could happen because everyone knows about it, because it's reliable. It's in the S&P 500. It gets put in people's 401ks. It get put in people's mutual fund. Those are all funds that have to buy stocks no matter what every month, every week. People's money going to a 401k, mutual funds, etc. And those mutual funds buy a basket of the S&P 500, the Nasdaq, the Dow, or so forth and so forth, so on. And so that is one strategy, which is going with a well-known company. Little bit of, not as much risk. They're not going to wake up tomorrow, Microsoft gone out of business or anything like that. Now, there's also some people who are like, I'm willing to take on a little bit more risk to find a $10 unknown stock that is going to be a major player in AI in a year or two. But somebody might be willing to take on a little bit more risk to say it's only $10, but this company could go out of business because nobody knows about them. What if they don't execute? What if the leadership is wrong about the direction of AI? And so when it comes to like which one do you pick, it all depends on your risk tolerance. What's important is what's important to you, which is being part of a company that's not going to go out of business, but you're going to pay $300 for a Microsoft, or is it trying to get a better return but taking on a little bit of risk, knowing that the company could go out of business, or some combination of the two? For me personally, I like sticking with bigger companies that I know aren't going out of business, because what we try to look for is what's called PRPs, or predictable repeatable patterns. And because so many people are trading the Microsoft, the Amazons, the AMD, it brings up a level of predictability in the stock chart where you can get in and get out, because it's not as easy for the whole world who's trading these stocks to unload their stocks, or for the stock to be manipulated like smaller stocks are. So it's really about knowing your risk tolerance and then knowing what you're going for. You're going for a huge return on a cheap stock. Are you going for a reasonable return that's better than the S&P on a well-known stock, and you can sleep well at night and not worry about them going out of business or being a scam or a scandal? Those are things you got to kind of take into place, versus just like, what's the best stock and how can I make the most money? It's like, at what risk and at what cost?
Mm-hmm. So what's the time period that you would normally hold a stock? How would you kind of gauge that?
Yeah, so there's two things that I do. One, I trade, and then one, I invest. And people use the two interchangeably, and they're two totally different things. When I'm investing, I'm usually looking at 1 year or a longer time frame, really about 6 months to 5 year type of time frame when I'm investing. When I'm trading, I'm usually in things that are 30, 60, 90 days. So I may be in a trade for 2 weeks. I may be in a trade for 30 days. Definitely no more than 90 days, because I don't want to hold over earnings, because earnings is one of those events that can make a stock drop or move pretty big. Now, if you're holding it a year to 5 years, you're obviously going to sit through 4 earnings every single year, but you have time to recover when you're investing for the long term. So if I'm trading, I'm just trying to take advantage of the price movement that's happening right here, right now. And I'm in and out once that price movement is over. It could be a week, could be 30 days, no more than 90. If I'm investing, usually I'm looking at 6 months to 5 years, and I'm not so caught up in the day-to-day movement. I'm not so caught up in what the Fed is going to do in 2 more months with interest rates, because long term, the market goes higher. So just really, those are the two school of thoughts. If you're trading a pattern, short term. If you're trading the fundamentals and where an industry is going, like Tesla, electric cars are the future. They still have the 18-wheeler to bring out. They still have a sports car to bring out. They could go into electric boats. They can license their batteries, their autonomous driving. But that's a long-term play. So if I'm investing, I like that stuff. If I'm trading today, I look at the chart, I'm like, Tesla's pulling back. I don't want to be involved in it.
Mm-hmm. So what are some like three times are uncertain right now? We're talking. Some people are talking about inflation, more inflation. Some people are talking increase in interest rate. People are talking about decrease in interest rate. And then are we going to go into a deflation and all that kind of stuff? So there's a bunch of different things going on, and it's a little bit uncertain. So what are like three stock option strategies where you can make money, in any condition? So whether the market is going to go down or up in the next 6 months. So what are some of the three stock option strategies, let's say specifically, that you would use today?
Yeah, well, I think things are actually more certain than uncertain, but it's the news's job to make people feel fear, to make people feel scared. If you really think about it, we actually had a real recession and they didn't want to call it a recession. We had two negative quarters of GDP, which is gross domestic product growth. It was negative 2 quarters in a row. And so that is the technical definition of a recession. But because we had job openings, they like, oh, well, we're not going to call it a real recession. But then the news is going to tell you the real recession is coming. Well, if we had a real recession by definition, then what recession is coming if we had the real one and you didn't want to call it that? So, to be honest, things are actually a little bit more certain now than it ever was. We made it through the negative 2 quarters of GDP growth. The Fed just skipped the most recent interest rate hike and then they raised it. So, we went from hiking every quarter to pausing and then they hiked it again to we're going to see if they're going to pause or stop again, which means we're closer to the end or them being done raising interest rates. And then the only thing left is for interest rates to stabilize or start to come down for them to start to cut interest rates. So the media will tell you things are uncertain, but I would tell you things are actually looking and getting better every single day. And this whole the real recession could still come and show up. It's really just a scare tactic to make people tune into the news. When you start to look at what does that equate to from a strategy standpoint, there's a couple different things you can look at. If you believe the market is going to turn around and drop, you can buy some short-term put options to capitalize on that. And what all that simply means is if you bought, let's just say a stock's trading at $100 and you bought a 90 strike price put, if that stock fell down to $75, you could force somebody to buy it from you at 90, even though it fell down to 75. So you could protect your account or make money from that stock falling. So that's one strategy that people can do to either A, protect their account, or B, make money from the pullback. If you feel like the market is going sideways, when I look at the charts, I'm actually pulling up the charts right now as we speak. But the market's in an uptrend. But if it wasn't in an uptrend, it was going sideways, there's an option strategy called an iron condor where you can do two calls and two puts. And as long as the market or a stock stays in the middle of the price range, meaning it doesn't go above 110 or below 90, you can make money. If you own stocks, my favorite strategy, and I know you said you're big in real estate, you can do what's called a covered call strategy, which means if you own at least 100 shares of a stock, you can sell an option for people to buy it from you. Let's say a stock's $100, you can sell someone the right to buy it from you at 105. If the stock doesn't hit 105, you get to keep that money that you brought in. We call it rental income. So you can make maybe $1,000 of rental income every single month. And then if the stock was above 105, you still get to keep that $1,000, and they have to pay you the difference between 100 and 105, which is another $5,000. So you get kind of a cash out payday. So those are three different strategies that people can use in this market. There's also one that I really love, is I say you can buy a stock at a discount or get paid for trying. You can sell what's called a covered put, meaning you can say Amazon's trading at 130. You can sell a 125 put option that says if Amazon comes to 125, I'll buy it. But when you buy it at 125, if they paid you $3 for that, you actually get a $3 discount. If it never comes down to 125, you still get to keep the $3, which would equate to about $300 of rental income. So, like I said, you get the stock at a discount or you get paid for trying. So there's over 30 different option strategies. I know you just asked for three, but those are just a few and how they work and how people can use them. I don't want people to get confused or caught up in what's a call, what's a put. I want people to think big picture. How do I make money, or at least know that there's a way to make money regardless if the stock goes up, if it goes sideways, or if it goes down. And when you understand how to use options for all three scenarios, you don't really care what the market does because you have a strategy for whatever it does next.
Yeah, I mean, I really like. So I used calls, I used puts, and I used the covered calls, which I really enjoyed that one because I could generate like revenue without having necessarily to get rid of the stock.
Yeah,
So that was good. Every once in a while, of course, I had to the stock was sold at the
it
price that
gets
I had to
called
call
away
at.
from you.
Yeah.
Mm-hmm.
But then I would just buy that stock or another stock that was in a better position for my next cover call. It was pretty it was pretty easy to do something like this, so that it was good. But yeah, it took some effort, took a little bit of research to do that, and but it was very simple.
Super simple.
And the
It's not as confusing as most people think.
yeah, exactly. But the idea, there's so many different option strategies, and I don't think you necessarily, I mean, unless you get like, this is what you do like every day, maybe you can go into the, I stayed away from all the condors and the eagles and all these ones. I stayed with these three very, very simple one, the simple call and put, and then the covered calls, which was just basically selling the contract and making money doing that. But so that was simple, easy for me to understand, execute, and then I could understand the risk that was involved with that. Is there another strategy that would be like what's the best strategy, I guess, for someone to get started? Because people already are kind of like a little bit concerned about buying the stock in the first place. Now we're talking to them about buying an option and potentially losing significant amount of money there, or multiplying the returns, one or the other. So what is the simplest one, the simplest option that you think someone should start with?
Yeah, well, the two simplest ones we just talked about. If you own stock, you own at least 100 shares, you can sell an option against your stock. Because when you're a seller of options, someone is paying you money for the right to buy your stock at a specific date down the road. And so that is one of the most safest, easiest things you can do. The worst thing that'll happen is you have to give up your stock, but you got paid to do it and you get a little bit of kickback on the end. And then on the other side, if it doesn't go up, you were going to hold the stock anyway, but you got paid to wait. You got paid that rental income that we talk about. So that's one of the safest strategies. It's hard to mess it up.
Yeah,
The
because you can't
second,
lose all your money. I mean, the
no,
worst
it's
case,
not.
yeah, you're making money no matter what. You just on the covered calls, the only thing that you're missing, that you're losing, quote unquote, is if it goes above your strike price. So you're
That's
missing
right.
on that additional gain there. So if the stock goes to 110 and you sold it at 105, well, that's 105 is what you're going to get. You're going to miss that $5.
Precisely. You give up a little bit of the upside, right? Assuming it's going to go to the moon. But how often do the stocks go to the moon? So that's one of the safest strategies. I think the second safest one, or even safer than that, is selling covered puts, meaning you have $10,000 and you sell $100 put on $100 stock, which means you're willing to buy it at $100 and pay $10,000, and you get paid up front to do that. You might get paid $2,000 up front, $3,000, just depends on the stock. But again, you'll get $2,000-$3,000 cash in your trading account. And at expiration, only one or two things are going to happen. You are now going to have to buy that stock at $100, which you were willing to do anyway, or it's not going to be at 100 and you get to keep that $2,000 or $3,000. So that's another one where very hard to lose all your money unless you're doing it on speculative marijuana stocks, stuff like that. So these are strategies that you want to do on good companies, not necessarily some random stock you heard about in your friend's basement.
Yeah. So one of the things, so you have like Power Traders University, Power Trade or Power Traders?
Power Trades University.
Power Trades University. Sorry, my text is a little bit far away. So Power Trades University. So tell me a little bit about that program. What does it do? And I think, so let's start with that.
Yeah, so Power Trades is a methodology of trading that I came up with where we look at a chart. So it's the 3P stands for power charts, power trades, power profits. And so we look at the charts and we look for that predictable, repeatable pattern in a chart first. Once we see that predictable, repeatable pattern, we pair it with the correct option strategy so that we can get place a power trade. Now, you could either do it by using options or buying a ton of shares on it. But either way, you put a lot of power behind it, whether that's money or options. And then you take a power profit, meaning we try to take trades that have a 1-to-3 risk reward ratio. So if we risk $1, we want to be able to make at least $3. And then we take our money, and kind of like the shirt I'm wearing, we live by, you never go broke taking a profit. We don't wait for stuff to go to the moon We don't try to wring every little penny dry out of the trade. It's like it hits our 1-to-3 risk reward ratio. We take that profit, we move over to the next trade. And so that's the methodology behind power trading. It's more about waiting for the right setups, placing the right option trades, and then not being greedy when it hits our number, as well as if it hits our number when it goes against us, not hoping and praying it comes back, but we like to take a small loss so that we can live the trade another day and get back to being profitable and not blow up our account, which, you know, a lot of people will hold on and hope and pray, and then they end up losing all their money.
Yeah, or you just like, yeah, that's why it's so important to have like the right exit strategy, having a right target in terms of the returns. Then you pick your entry point and your strategy to get there. And then once you set your exit strategy up front, then you're not so greedy after that, because so many people are kind of like, they go and then the stock market goes up, say, oh my God, that's great, that's good. And then the stock market goes back down and then they lost all their profit, or sometimes even their initial investment.
Oh,
So
we see it all the time. They watched it go all the way up and they watched it come all the way back down.
yeah. So that's why
It's
it's
sad.
good to have an exit strategy. And like as you mentioned, not being too greedy. You hit your number, you hit your, you don't have to hit a home run. You just have to, keep doing base hits every,
Consistency.
consistency. Exactly.
Consistency wins this game.
And tell us about, so you have this other thing, which is 5-year millionaire program. So that I think a lot of people are going to be extremely excited about that, because everybody wants to have $1 million in the bank. And then, so tell me about more of that program. How much does it cost? How much do you need to get started, etc.?
Yeah. So the way that 5-Year Millionaire came about is when I looked at how long it took me to go from being broke to becoming a millionaire, it was really about 5 years when I looked up and realized that I had made $1 million. And so I really looked back and I understood that becoming a millionaire is just a math equation. Like everyone puts this big um like emphasis on like, wow, you're a millionaire, you made $1 million, you did something great. But I mean, you could sell 1 million bottles of water for $1 and boom, you got a million bucks. If you can get some foundation to donate the water, you get it for free. And if you could sell it for $1, boom, you make $1 million. And so same thing with the stock market. What I realized was when I look back on my trades, it was only so many trades that were profitable. And when you carve them out, I was like, man, if you could just make basically a 10% return every single month, or 60 trades where you make 10% return, 60 trades. If you divide that out over 5 years, that's 12 trades a year or one trade a month. If you can make one trade a month for 12 trades a year, after 5 years, if you start with $4,000 and you make 10% and it compounds, you would actually have like $1.2 million in 5 years. And I was really passionate about helping people like me who didn't have a lot of money. I'm like, I could save $4,000 between tax returns, between commission sales at my job when I was working in corporate America. But if I could just consistently make 10 years and 10% in 5 years, my life could drastically change. And I thought, how can I help other people start that journey? Because when they hear becoming a millionaire, they think it's this far-fetched reality. But really, it just breaks down to starting with $4,000, understanding how to read the charts, place the correct option trade. And if you can make 10% every single month for 60 trades, you'd be a millionaire in 5 years. Or if you get it done faster, great. And so what we do in this program is I send out 1 to 2 trade alerts a month just designed to get 10% return. So far, we've been consistently hitting 10% return. And what I love about it is all documented. So it's not like, is he telling the truth or how do I know he could do it? It's because we record it. We record it. We record what we're looking at, when we would get in, when we would get out. So it's all time stamped and recorded, and we have a spreadsheet and we send out the text alert written and video, just in case people can't watch the video, they can read the written part. And then we enter and exit live, or if we can't do it live, we do it in the video. And we've been able to make 10% every single month. And it's just a matter of just that consistency. Some trades have been 30%, 40, but it doesn't matter. All it's about is just doing 10% consistent. In fact, we just had our first loss and it was like 5% or 4%. We just had our first loss, but It's just about making that consistent 10%. So we help people start that journey, do the technical analysis, fundamental analysis, and find the trades for them. It's still up to them to pull the trigger and do the investment, because we're not licensed professionals and we're not managing people's money, and we're not telling them they should do it. We're just sharing with them what we found. And we tell everybody to actually do it in a practice or trading account, but it's up to them if they do it in their real account. So that's what the program is about. I never like to talk about price because it could change, but just know that it's less than the price of, your cell phone bill or your cable bill.
Per month?
Per month. Yeah, it's a monthly subscription.
All right, very good. Well, thank you very much. So if people want to know more about your program and they may want to subscribe and all that what's the best way for them to reach out to you?
So the best way is to go to thebrownreport.com. If they are brand new to the stock market, we have what's called the Stock Market Starter Pack, which is going to talk to you about those 3 most profitable chart patterns that we like to trade. It's going to talk to you about opening your trading account, your practice account. And then we also have what's called a Stock Option Starter Pack, which is going to walk you through call options, put options, how those work, and how you could protect your account and make money whether the market's going up or down. Both of those are free resources, and they can find it at thebrownreport.com. And then everything else is on there as well. Social media, about Power Trades University, our 5-year millionaire program, etc. So thebrownreport.com.
And if people are too cheap to subscribe to your program and stuff like that, so they can also go on your podcast and get a lot of the information and education. I'm assuming your money, markets, and mindset podcast. They could get a lot of information for free, and then kind of like get excited about what you offer in the rest of the program, and then maybe jump in at that point.
Yeah, well, right? those two resources we mentioned are free, so there's no charge for the stock market.
Brown report as well. Okay.
Yeah, for the stock market starter pack and for the stock option starter pack, those are both free. Power Trades University and 5-year millionaire is what costs, but those 2 free resources are free. But while we're on the topic of free, my YouTube channel has over 80,000 subscribers. I have a couple of videos that have done over 1 million views. I talk about opening accounts, stocks, options, all the things there as well. So they can check out the YouTube channel. They can check out the podcast, but everything is in one place: podcast, YouTube. They can all get to it from thebrownreport.com.
Excellent. Well, great. Thank you, Jason. It was a pleasure speaking with you. Good luck. And I hope, we have smooth sailing moving forward. But I know you're going to make money whether the market goes up or down.
That's the game plan, brother. Thanks for having me on.
Take care. My pleasure.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.